Hello, everyone, and welcome back to Your Finance TV. We're starting a new series here today, ACF Capital Pulse, and it's reviewing some of the research that's been done by ACF. And today we're looking at research in February. Christopher Nicholson's here to talk to us about that. Welcome to the show, Christopher.
Hi, Scott. Great to be here as ever.
Great to have you back. Now, one of the things that was very popular with ACF in February was a report you've done on the Greenland mining opportunity. Can you give us a little bit of background on the report and what's in there for people to look at?
Yeah, sure. So we were looking at Greenland. We thought it was really, really interesting. And we also kind of surveyed and talked to both corporates and investors. And we came up with a sense that it's not very well understood. You know, it had a high point in the early 2000s and it sort of drifted away. The kind of excitement about it has drifted away. But it's an incredible mineral opportunity. And we think it's really quite poorly understood by investors and that some things are changing.
Okay, so that's a good lead in here. So what are the misconceptions about mining in Greenland?
Yeah, I mean, it's great. First of all, everybody thinks you're building stuff in the Arctic, which doesn't sound great and sounds like high cost. Everybody thinks that you can't get the stuff to market except for a couple of months of the year, which, as we'll talk about, is not quite the case. They think that the politics are unpredictable in terms of policy, which of course is terrible for people trying to invest. And they also think that the valuations are beaten up, which they are.
Okay, so what is different about Greenland now to suggest that investors' interest might change?
Well, quite a lot of things have happened. I mean, one of the other things that they're concerned about is the number of mines that have actually gone under production, and they're right to be concerned about this because at the end of 2023 there were only two. So after 14 years, there are only two mines producing, and then in 20 and then fourth quarter 23, the Ruby mine closed. So you had one left, the Anorthosite mine, which is incidentally there's a lot of that on the moon, which is kind of relevant at the moment. The other thing that excited us, but what's really changed is that Greenland's policy, they kind of navigated their way through things. You know, they've tried to keep everything pristine. They banned the mining of uranium within a certain concentration. They're pretty edgy about what you can do with oil and gas. So they want to exploit the minerals, but they want to keep the place clean and sustainable. And they've been just figuring their way through that over the last decade. And, you know, there are only 56,000 people. So the politics is quite fragmented. It's all coalition stuff. So things get done, then they get reversed. Policy statements are made, and then they don't happen. But we think finally something has changed. They've been very supportive of junior miners. So, for example, they've really got on the front foot. And I think now that you can actually get a license within 3 months, a permit to operate within 3 months, which is faster than any jurisdiction I can think of right at the moment. So on the policy side, things are being more consistent and they're going forward. Major concern for investors should remain so. But if you're on the cusp of change where they've got their act together, then that's looking very interesting. The current prime minister, he is actually the ex mining minister as well. So there seems to be some consistency. They want to exploit these resources in the right way. And what we like about this as well is that if they go down the sustainable route, so all that pain for investors, what it suddenly does is says, this is the ideal sustainable jurisdiction. If you've got an ESG fund, if you want to invest in sustainability, then Greenland is the place to go because they are determined to keep it clean.
So what do investors need to know about Greenland as an untapped resource?
So the class of geology is fantastic. It is, as you say, Scott, basically untapped. The scale of the resources there is world class in terms of the potential that there looks like under the ground. The other thing to be aware of is that they basically have economic scale deposits of the 38 criticals. You have about 16, 12 to 16 of those on your phone. I can never remember how many. I had to look it up even to know it was 12, but it's 12 to 16 in your phone. They're all there. Plus, a Anorthosite, which has already got plenty of commercial uses, but it looks like a bit of a future mineral as well. The other thing that investors should be aware of is this problem with the sea lanes, this idea that you're building in the Arctic. It really isn't true. Most of the mining geology has been done for obvious reasons on the green part on the southern coast. And the climate there is basically northern Scotland. Okay, northern Scotland is pretty challenging, especially if you just get right out the north tip, but it's perfectly manageable and it's not the Arctic. And then the other thing is that in a kind of horribly ironic way, the metals that they have and the resources that they have all contribute to lowering carbon emissions, to trying to control temperature increase on the planet. And with this process, the reason why we're doing all this is because sea ice is retracting at the poles. And that is happening at Greenland too. I mean, they had the biggest ice recession they've ever had in 2023. But what it means is the sea lanes are more open, so for longer. So there's this quid pro quo that's going on. And as I said, it's kind of ironic. But what it does mean is that once you start getting stuff out of the ground, cash flows are more predictable because you can ship it for more months of the year. So that de-risks the project and it makes it look more attractive. And it also, in time will have an impact on valuations, raising the ultimate valuation. It also belies the fact that costs are crazy because you're building in the Arctic. Some of the companies we spoke to in preparation for our thematic research, a couple of them were suggesting that actually building the port infrastructure is not that expensive and can be done quite fast. Others didn't agree, but it depends how you go about it and what you need. So a lot of them are on the coast. They've got these deep fjords with lots of tidal water. It's actually relatively cheap to get the stuff out into bulk containers. Once you get it into bulk shipping, the cost to ship between Europe and the US is the same. Greenland is strategically put in the kind of, not exactly the middle, but it's in a very strategic position. And they're friends with NATO. Denmark, they're basically a kind of what's the word? I'm going to say subsidiary, but I don't really mean that. But they're kind of a subsidiary of Denmark, but they're very independent. And Denmark's giving them about $600 million a year to build out all the infrastructure that investors thought wasn't there. So they're building 2 international airports, all this stuff. So there's a lot changing. This is why we're thinking it's a really interesting space. And another advantage for investors is that there aren't that many plays out there. There may be half a dozen public plays to maybe a little bit more, 6 or 7 public plays, but it means you can really get to know it. And therefore you can make the choices. And as I said, except for Amarok, they're all beaten up. So it's a great point to start looking, considering, and deciding if it's the right risk profile. If you want that classic 10 bagger, then there are worse places to spend a bit of time looking if your portfolio can, support that kind of risk profile.
Well, Christopher, one last question for you. You've covered a lot of in answering that question. Why should investors be considering Greenland now rather than later?
I think it comes back down to the valuations looking awful, with the exception of Amarok, which no doubt any self-respecting CEO is going to say I should be worth more. We need them to say that so that we can actually, if they're not saying that, then no one's going to be saying that. So I think it's the timing that the valuations are so poor that for these companies that it makes sense to be researching them now, to look into them now for preparation. So yes, it's speculative. Yes, it takes time. You've got to have patience. It's not a flip. It's not next month's. But if you've got patience, and we're kind of 3/4 of the way down the exploration, mining, production process, we're not 14 years away. We're more like 7 and 3 and 2 away. Then for a long-term investor who's looking for significant returns, you want to get in. It's the city cliche: buy low, sell high. But you want to, in other words, you want to be looking when things are looking unpopular. The reason we're signaling now is because we think it's changing and it may well become popular in not so distant future.
All right, Christopher. Well, thank you so much for this. Very insightful, and glad to see that investors are looking at the report. And people can go to the ACF website, which we've got down the bottom here. We look forward to talking to you again next month.
We look forward to it too, Scott. Thank you very much indeed.
And for everyone else out there, good luck investing.